Hello and welcome back to the Note. Well, it's been an ugly start to the week on markets, and that's because of a big renewed fall in the oil prices. You can see Brent Crude, which was down more than 5% today, is now below the psychologically important barrier of $50 per barrel for the first time in more than 6 months, and this really wasn't expected to happen. The story for this year so far had been of a small recovery, a plateau, and what many people had lulled themselves into believing was that we would then see a steady rise in the oil price from here. But as you can see, in fact, the trend, as you can see from the 200-day moving average, never reversed. It continued to be downwards, and now we've seen a significant renewed sell-off. There's no single big reason for this. Perhaps the most important is that following the nuclear agreement, the market expects Iranian supply to come back on course later in the year. Add to that that expectations have become worse, that many people had increased supply on the expectation that prices would steadily rise. And finally, macroeconomic data does not look good. In the case of China, we had purchasing manager data for China, as for many other countries today. They had their worst reading in 2 years, suggesting an economic contraction, obviously not healthy for the commodity complex. And indeed, commodities as a whole are now at their lowest level since 2002, if you go by the Bloomberg indices. This does mean that inflation expectations are also lower. In the case of the US, inflation break-evens are their lowest in some 6 months. And that, in turn, means that the hit for stocks really hasn't been that bad outside of energy stocks. That's because if you have inflation so much under control, it diminishes the case for a rise in interest rates from the Federal Reserve in September. Therefore, this is still a muted effect. I'd like to finish, however, with one really very sad data point we got today, which is the Purchasing Manager Index for Greece. Remember, again, that anything above 50 shows expansion, anything below 50 shows recession. It's not so long since purchasing managers were expecting a slight recovery for Greece. As you can see, the imbroglio of the last month, the failure to agree, which required the banks to close in Greece, has been grievously damaging for the Greek economy. You can argue as long as you like as to who was responsible for that failure to reach an agreement, but the ultimate bottom line is that the failure to agree has caused immense harm, mostly, of course, to the Greek people, but also to their creditors. It's not surprising, but it is very sad.
The energy giant wants to extract CO2 from a Scottish power plant at Peterhead. Owned by the utility SSE, pipe it to Goldeneye